So I just want to share with you my plan or basically hopefully give you some guidance to know what your plan is. Okay, so again, like I said, this time around I'm doing a bit different. Okay, in the past I just look more 6 months. This time round I just want to do a review of what I have gone through so far, and should I make any changes over the next 5 years? Disclaimer: make money, be happy; lose money, don't scold me. Okay, now, usually the planning process, or in fact, a very common, a lot of people plan process is this: what are the news, what are the likely impact, what should we do lah? So of course, if let's say we follow this process, we will be looking at one major news. Okay, so what is the top news that everybody's buying now? Anybody want to share? So in fact, before today, before this session, we have thank you so much, Trump. Okay, so of course, usually you're like, oh, Trump, yeah, then what will Trump do? What will Trump not do? Okay, so in fact, I'm going to disappoint you all quite a bit. Okay, I'm actually going to disappoint you all quite a bit. For the long term, right? I don't think, or at least personally, I don't think this is the way we should do it. Okay, so in fact, later you'll see the Trump, to me, if you think in terms of long term, Trump to me is not even a main news. Okay, I wouldn't say there's totally no impact, but it's not something major lah. So in fact, I would suggest, especially for those who are like me doing the long term review, this should be your planning process. Okay, how has been your portfolio performing so far? Anything need to change? And okay, what are the news that may actually cause you to change? So actually should be the other way. Rather than trying to find the news first, I think we should have a review of, currently how's your portfolio, how are things, then ask yourself, do I need to change? And what are the things that may cause you to change? Okay, so this is the approach I'll be doing, and of course, this is the approach I'll be sharing in this presentation. Okay, now SG market, a lot of people actually complain, SG market lousy, finally last year, wow, phew, how stressed am I, especially when I was very active in SGX. I keep telling people, endure, the day will come, until last year finally come. So SG market last year finally shoot up to 3,008. So by the way, make a guess. Has SG market surpassed previous high? If you think the answer is yes, don't mind help me type a 3. If you think the answer is no, have not surpassed previous high, please help me type a 4. Has SG market surpassed previous highs? 3 is yes, 4 is no. Okay, thank you so much. Answer is no. The previous high was 3,009. It's not closing, is during the day market went up to 3,009. That was in 2008, before the 07 or 08, before the Lehman Brothers crisis. Okay, not the closing, but during day 39. So technically, we have not surpassed the previous high. Okay, but of course, glad that market has moved up now. So if you ask me, this is quite characteristics of a stable market. Okay, so I wouldn't say this is good or bad, but if you like stability, if you're like me who want dividends, this is actually a very good market. Okay, long term, don't fluctuate too much. Then certain point in time, you will actually reach up like what we're happening now. So this is what I've done here. I've actually measured the results. Okay, assuming if you've done a dollar cost averaging on SG stock market. Maybe I just show you the Excel spreadsheet, then you all can have a clearer view. Okay. Okay, 1 minute. Okay. So this is what I have done. Okay, so basically I've actually go and note down all the monthly STI figures over the past 10 years. Okay, as you can see, the monthly STI figures over the past 10 years. And assuming that you have done this thing called the dollar cost averaging, every end of the month you go and buy one STI ETF, for example. Every end of the month you go and buy one STI ETF, as per what let's say this Excel spreadsheet show, okay, what happened here is this on a per annum basis, on a per annum basis, you will get a 3.8% return. So every month you buy STI over the past 10 years, on a per annum basis, you will actually achieve a 3.8% return. Okay, but don't forget, if you buy STI, you will actually get dividends. Okay, you actually get dividends. I know 3.8% is nothing sexy, nothing to be proud about. But don't forget, you actually get dividends every year. And based on, I think this is ChatGPT. Or, okay, so ChatGPT actually bring me to this website, Grow Bean Sprout. Okay, I don't know what website is that, but, I asked ChatGPT, okay, it's about 4%, which is about there. Okay, so if you get 4% per annum, even just on STI, so net, the return is about 7.8%. So it's actually not too shabby. It's not too bad, just on dollar cost averaging. So for those who think that Singapore market very lousy lah, Singapore market don't move okay. If you plus your dividends okay, because I know that a lot of people don't track their dividends. If you plus it, it's actually not too bad. Okay. So I use this as a proxy. So even though, like, for example, you're like me, okay, I actually don't do dollar cost averaging STI, but what I do is, or at least there was a certain period of time, I do buy Singapore stocks on a regular basis. Every month I buy one REIT, then after the next month I buy one blue chip. Okay, then next month I buy another REIT, so on and so forth. If you have done that, your return should be actually quite close to this. So I just do this as a proxy. I just do this as a proxy. Okay, anybody has question on this? Let me just see whether I have. Also, if you want the calculation, this is what I've done. So I assume that every month I spend $2,000. Or you can see over the past 10 years. And if you done so, this is the number of units that you have bought. Okay. Then based on today, you have bought like 77 units of STI, and your return will be about 3.7, 3.8%. Okay, all good, no questions. Okay, all good. Okay, now, for US, I know some of you actually invest in US. So again, yep, you may not have done dollar cost average, but you may be someone who have like, now and then buy one US stock. Now and then buy one US stock. Then your return should be about like something like this, something about like this. So US past 10 years has been a very nice up run. Okay, if you have done so, do a dollar cost averaging on the US. Let's say this is Dow Jones. Dow Jones, if you like every month go and spend $1,000, $2,000 on Dow Jones, just on the capital gain alone, you're looking at 9.2% per annum. Per annum, this per annum, 9.2% per annum. Okay, but the dividend is actually, of course, not as good as Singapore. They are talking only about 1.5%. Okay, I'm quite sure this is even like pre-tax. After tax will be even lesser. Okay, so total return if you have invested in US is about 10.7%. Of course, it's good, Okay, I'm not saying that this is lousy, definitely good, but I'm just saying that Singapore is not too shabby lah. So a lot of people thought that, wow, US is 9%, Singapore is only 3%. That's not true. Okay, don't forget you have to add the dividend element. So Singapore market is more stable. Okay, economy is more stable. So in that sense, you get 8% lesser risk income, but US will be like a growth market. You have more volatility, but net overall you have higher returns. Well, so roughly, if you have been like buying SG stocks regularly, you have been buying US stocks regularly, even though you don't do dollar cost averaging, your return should be more or less about the same. So that's why I actually show you all these two charts as proxy. Okay. So of course, some of our other instruments is like insurance. Most of us have life policy. I actually also did a review of my own personal life policy. So by the way, this is on the website. If you actually go and Google what is the returns over the past 10 years, Singlife, okay, the return will be about 3% to 4.5%. Okay. So again, a life policy, the return also not too bad on that. For those who think that a life policy never give return, also not too bad. Okay. So of course, like for example, if I were to sell my life policy away today, I will get about 4.5%. But of course, after I sell, I would have that insurance element. So that is definitely not something I want to do. But I'm just saying that assuming I actually need my money, because my life policy, every year I put in about 2,000. I've done that for the past 20 years already. And yep, if I sell today, I will get about 4.5% return for my annual $2,000. Okay. Now for my own insurance, okay, I actually bought a few life policy for myself, my daughter. I realized that it depends on how long I hold the policy. So for the longest one, which I held for let me think about 20 years, 2000, sorry, 25 years. So I have one life policy for 25 years already, right? Yeah. So if I were to sell today, the return is about 4.5% per annum. So my daughter's one, she got one, I think about 10, no more, maybe 15 years. Okay. So if she were to sell a policy, it's about 2.5%. Also, it ranges. So maybe estimate insurance is about 3.5% per annum. Okay. Okay, so again, you can see I'm actually using the PPIG, so which is again what most people will have. Most people have a property, most people have insurance protection, income stocks and growth stocks. So why these instruments are chosen again is part of PPIG. Okay, so for property, I pull out this chart from URA website. This is the residential property price index, and you can see that the index went up by how many percent? About 50 lah, okay, or 40 to 50%. So this was slightly below 150, okay, 10 years ago, and today is above 200. So you're talking about went up by 40, 50% over the past 10 years. If you bought property 10 years ago, the purchase price, the property price, the property price probably has at least went up by 40, 50%. Okay, so this is what the overall data has said. Now, the thing here is this, of course, most of us, when we actually buy property, we actually take a loan. Assuming you actually take 70% loan, interest rate of 2.5% for 25 years. Okay, let's say this is your own stay property. Your return is actually about 4.8%. Okay, because if you take loan, your upfront is lesser, you pay lesser amount. There's a leverage effect. So your return will actually have been about 4.8%, slightly higher. And if let's say that property you bought for investment one, that means with rental, your return actually is about 12.2%. So it's actually quite high. Not too bad, not too shabby for those who buy property. Okay, so rental yield of 4%. This is an assumption that my rental yield is about 4% of purchase price. Okay, so like I said, what I'm doing now here is this. We want to construct a long-term plan, or at least the next 5 years for our own investment portfolio. Okay, so the first step should be reviewing lah. Where have you come so far? How far have you come? How far have you come? So I'm actually done here. I've actually shown you what are some of the indicators that probably most of us won't be too far off lah. So if you buy a property, some of you may have prices that went up more, some may went up slightly less, but generally should be about there. Okay. So these are the instruments that you have used probably, either knowingly or unknowingly over the past 10 years. And these are the results they have achieved for you lah. Okay. Any questions on this juncture? Anybody want to ask me any questions? Agree, disagree? No. Okay, thank you so much, Charles. Thank you so much. So I didn't account for all the costs. So if you want the precise one, probably, plus minus 1% max. Okay, you won't be more than 1%, probably even 0.5%. Okay. Okay, thank you so much. Yeah, so thanks for question. So I just did the overview. So this one actually give you a good oversight. So actually from this exercise, even for myself, something that sort of like surprised me is that, hey, actually Singapore market not too bad. I always thought US market is a lot better. A lot of people say that, wow, if you have bought Tesla, you want 100% return, 12% return. But those people, when they say that, when they actually bought something and lost money, they never tell you. Okay, I have so many friends who said, wow, I made such a killing with Nvidia with Tesla, with Palantir Then all they lose money, all they keep quiet. Then only drunk already, then tell me, yeah actually that one I lost so much. So net about that one, cannot run away one. Unless you really so good, buy stock never lose money. Yeah? Unless you're so good, buy stock never lose money. Even Warren Buffett don't dare to say that. Warren Buffett also said that he lost money in certain counters. Of course, net he will win. But I think the Berkshire, the return is only about 20%. Okay, 20%. So yeah lah, you hear stories about those stocks 100%. Yes, I don't deny that, but not many people just put all their money in Tesla. Not many people just put all their money in Nvidia. So it's about like that. So thanks, Jinan. So one thing that when I do this exercise is, hey, me just being on Singapore market is actually not too bad. Okay, at least I get to sleep better. So number one, I don't have to wake up in US time. Number two, 8% and 10%, yeah lah, not too bad lah, given the risk I am subjecting myself to. It's actually not too bad. Like for example, if you want to buy growth stock, very stress one. Like if you want to buy Nvidia today, anybody can tell me what is Nvidia's PE today? Yeah, thank you so much. 54 times. Wow, a lot of people say that, wow, Nvidia is going to do, like for example, okay, I didn't really follow Trump news, but only news I caught here is this, by the way, wow, now very proud of Singaporeans, the Chu Shou-zhi, is it Chu Shou-zhi, the TikTok CEO, he's actually being invited for Trump's, what they call that, the Trump's presidential ceremony, and I heard he's actually one of in the VIP seats some more. Then of course we all know that Elon Musk, all this. So basically, I think Trump is going to support tech quite a bit. Okay, you can see probably tech is going to do well under his terms of office. Okay, but the question here is this: 54 times PE 54 is cheap or expensive? Someone help me here, just in case. A little bit refresher. 54 times PE, cheap or expensive? Very expensive, So US market, yeah lah, can make money lah, but then like that, you buy already, you can sleep well or not? Story very nice, but can say on okay. So to each his own. I'm actually quite happy with what Singapore market actually given. Okay. So again, it's definitely not Singapore STI is not just give you 3-4%. Please include the dividend. When you look at the overall return, you're talking about 7-8% as per what the past 10 years has actually brought to us. Okay, so the other thing that actually sort of surprised me is that actually property is actually not too bad. Property return is actually not too bad, not too special, especially if let's say you buy for rental. Okay, so it's something whereby you stay there, you got use, end of the day, after you still make money. I mean, of course, we all know that make money, but I was actually pleasantly surprised. It's actually like 12%. Okay, this is per annum, it's per annum. So it's actually quite good. So I've done the first step. So the next thing, okay, so in this review, so in fact, I've been asking myself, my portfolio has performed it this way. Like I said, I'm a long-term investor. I do trade now, but very small. A long-term investor, these are my main portfolio. So instead of asking, what are the news, the first question that I come to mind is, hey, anything do I need to change or not? So like, for example, assuming if let's say you have been doing dollar cost averaging on STI over the past 10 years. So before asking what the news, you may want to ask yourself, hey, should I continue? Okay, so I think that should be the way to do your review lah. What you have done, we have a starting off from the past first, then really ask yourself, if your past is doing well, why you need to change? You know what I mean? And like for example, property, assuming that over the past 10 years, you own a property and it's been doing so well. So the question more is like, hey, should I actually cash out? Okay, then we talk about the news. So hope you get my thinking process, or at least, the point I put across is don't just jump straight into the news. Don't just have a knee-jerk reaction to the news. Okay, so really it should be with reference to what you have already done. Okay, hope this point is clear. Okay, so to answer this question, is there anything need to change, right? So the question I have here is this: can such returns continue? Do I think that Singapore can continue giving me about 8% return per annum over long term? Okay, so that's the question. Do I think that US can continue to give me about 10% return over long term? Okay, do I think that property can give me a return about 12% return? So that is the question. And of course, the second question is, everything as a function of risk. Is it worthwhile to continue taking the risk? So we will answer these two questions. Okay, so Indra got a question. Maybe let me answer a question first. If you review your portfolio, when enter stock past 6 tests, then when you review spotted red flag from one of the 6 tests, but I see now the price is lower than your average price, will you keep sell the stocks? Okay, so Indra, I will actually, when that happens, right, I will also, okay, so basically now the price has dropped.
Yeah.
Okay, so I will also have to besides the 6 tests, I also want to see whether am I still confident with the business.
It growth lah.
Oh, so you are still okay with the business.
Yeah, but it's not really have the growth story.
If let's say, for example, like in your case, maybe not have the growth story, or worse is you also don't know what's the business. Yeah, then maybe I'll switch.
That
I
means
will
you'll cut loss lah.
I will cut loss and switch. Okay, so that is on the basis that you don't like the business already lah. Okay, that's one way. That's one way. Like for example, if when I bought this and pass the 6 tests, now you don't pass, right? And
Right.
this business is either so I don't like, or then I will sell. I will cut loss.
Okay.
Okay, that is one way. Then the other one, the way for you to think about it here is this. So after you sell, do you have a better place to put your money lah? If you sell already, then after that, in the end, go and have a better meal, or I don't know, go and anyhow spend money. Then I'd rather you put the money inside there.
Need to
Okay,
find the new counter first lah.
correct. You find a new counter, or you think that, maybe US has more chance now, China has more chance now. Then maybe I will consider selling. So if let's say I'm not too sure, sell or don't sell, then I'll see if I sell, what do I do with the money lah? Okay.
Okay.
But
Thanks.
generally speaking, if let's say when you buy, it pass the 6 test, then suddenly it drop, I will have my concern. I have to understand, is it one off, or is it likely to, is it just one off, or is this failing is going to keep on continuing like that?
Yeah.
Okay, so by right, once a company pass the 6 tests, it don't change so often. So you have to understand what is this 6 tests is about. Financial, like for example, you just take it like a human. If let's say you are someone who are very budget conscious, very kiamsiap, okay, very stingy. You earn 2,000, you only spend 1,008. No, it's a die-hard habit we don't change very often one. You all get what I mean?
Yeah.
I've seen a lot of rich people after being so rich, still go and bargain, save 10 cents for kopi one. You know what I mean? So usually those who pass 6 tests will continue to pass 6 tests one, unless of course like things like COVID, blah blah blah, so on and so forth. So
Yeah.
if it sudden change, I will be a bit careful. Okay.
If like SIA like that, how the current ratio still below 1. SIA.
SIA was never my interest. Okay, sorry, I got no good things about to say about SIA. So
Okay.
no,
Let's
okay, sorry. Let me correct. No, let me correct. I have no good thing to say about airline industry in general. So
Not your
personally,
interest.
uh,
Not your
yeah,
interest.
no interest. So personally, I think airline industry got this problem. Okay, I realize a lot of airlines, they at least there's one period they face bankrupt. So the reason is there's a pride element.
Right.
There's a pride element. So most country need to say fly the plane. So don't care make money or not. I want to have my flag flying in the sky lah. So they may be subjected to certain stress, which like don't make money, never mind. As long as the flag is there, okay. Yeah. So I do sense that a lot of airline companies have this kind of issues.
Okay.
Yeah. So that's why, generally speaking, those national carriers be concerned. Okay.
Okay, thank
Okay. Thank you so much. Thanks. Okay. So these are the two questions. Okay. Can return continue? Okay. Answer this first. Then, of course, why do I answer these two questions? To see, do I need to change anything? Okay. Now, hot topic for today. Yes, Trump returned to White House. So this one, everybody know about it. So why am I not concerned? Because if you think long term, so how does this affect you 5 years later? Okay. We all know that, yeah lah, suddenly he's going to do some crazy policy, but you think about long term, how does it impact? So basically, my point here is this. So whatever impact is actually quite short term or usually non-conclusive. So a lot of people say that, oh, Trump is actually going to increase the tax, okay, import tax, whatever. Okay, you have to understand, in like, number one, Trump, this is his second term. Okay, I think the first term, how should I put it? He has proven that he's not crazy lah. Okay, I actually watch a YouTube whereby he share his rationale of why he thinks that he want to increase the tax. So my point here is this: end of the day, it's not that the policy is no good or stupid or whatever. It's just a different point of views or different way of doing things. Okay, so he does has a very good rationale on what are some of what we call the extreme policies actually thinking of. Okay, so in that sense, it's very non-conclusive. We cannot say that, because Trump come to White House, confirm you are going to have increase in the China US war. You can't really say that, you see. Or you cannot say that, Trump coming confirm that, things will turn back. Okay, I don't think anybody can say that. So that's why, I'm not so bothered because really we can, it's everybody's guess, you see. It's everybody's guess. And the most important point here is this, so what? How does it affect my long term lah? Okay, that is the question. Okay. Yeah, you can say that it's confirmed volatile, but again, from my long-term fire, precisely, Patrick, precisely from my long-term fire perspective, this volatility, actually, I don't care. Correct or not? Okay? Like, for example, every time it's going to be volatile, market is going to be always volatile. Okay? So if you actually look from 5 years, you up, So, that is maybe one perspective. Okay, of course, I'm not saying I'm totally right. Maybe one perspective you can consider. So the other reason is also that, it's non-conclusive lah. Like I mentioned just now, we don't know. We don't know. I think Aravind actually showed us a very good article just recently. In fact, during his term of office, the Dow Jones actually went up by about I think about 12% per annum. Okay. Oh, sure, of course, Eric. Yeah, there's a good chance. But seriously, I've been attending market update talks over the past 5 years. Yeah. All the conclusion is volatile lah. Then the other one is cautiously optimistic. So if the market go down, I'm correct because I said cautious. If the market go up, I'm correct because I said optimistic. Yeah. So so what? It have always been volatile. So that's why I am not so bothered. But of course, this is me. Just take this as another perspective. Okay, don't have to believe me totally. I'm just sharing my point of view. Now, what is actually more important for me is like, long-term news. Okay, long-term news. Things like this, like China can overtake US as world biggest economy by 2035. Okay, like for example, US 35, China techno much stronger than previously understood. So I think this is a very significant news from a longer term perspective. Why? Okay, now US economy, US stock market has done very well. Okay, has been going up all the time. Okay. I think predominantly it's because of one reason, which is because they are number one. They are the 老大. They are the big boys. They are the biggest boys. Okay, as in all things in life, if you are number one, you attract all the funds, you attract all the attention. Okay, nobody, not say nobody lah. Most people don't even know who is the number two lah. Nobody really cares about number two. If you're number one, okay, you get everything, and of course, your market will go up. Okay, so now I think more and more, in fact, I think this is the reason why US has been, doing funny things, is they are losing their number one position very soon. Okay, at least this is what the news has said. Okay, in terms of the GDP, probably China is going to overtake them very soon, or at least in the next 10 years. In terms of technology, okay, China, I am not a very tech person, but I do understand they are likely to, probably already surpass, surpass what, the US tech can do. So at least I understand for the EV market, China, I'm not too sure whether the China EVs are better, but based on what I read, China can definitely do the EV cheaper than US, which is quite true. I think BYD, I'm quite surprised BYD is actually a lot more affordable than Tesla in Singapore. Okay, for those who have been looking to look at EV cars. So I think if let's say US is no longer number one, okay, I have my reservations as to whether they can continue such growth pattern. So I think these are some of the news that is I would like to pay more attention to rather than more of the short-term ones. Okay, again, I'm not saying that the short-term one are useless. For the traders, very good. For those who are actually want to see for next 6 months, I think it's very good. Okay, but like I said, this time around I'm doing a long-term review. That's why I tend to focus on news that have longer impact. Okay, again, like this. US may lose their number one position, and China and what do you call that? China may take over. US may not be number one. And yep, I am not so certain whether US can continue that 10% gain every year. Can okay, just to make sure everyone is clear. So if you are clear about my thoughts, what's my line of thought? Okay, number one, I want to know whether do I need to change anything. This is what I want to do. Then I go and refer to the news. Okay. So what I'm trying to do now is the question is, can such of the past 10-year return continue? So now what I'm saying here is this. This news doesn't help to answer my question. Whether is it Trump or is it Biden? Okay. It doesn't answer my question whether next 5 years market can go up by 10%, can continue to go by 10%. But actually this news get me worried whether US market can continue by 10%. So if you understand my line of thought, don't mind just help me type a 1. Okay, if you're lost really don't know what I'm talking about, please help me type a 0. Okay, I just want to make sure. Okay, that's the thing about Zoom. I cannot see your body language. Probably now some of you are lying on the bed sleeping already. Okay, great. Thank you so much. Thanks. So in that sense, I think I personally wouldn't want to bet so much on US anymore. I wouldn't bet so much on US anymore as US is slowly losing market share to China. Can they still sustain such growth in the stock market? I have my reservations. I am worried. Or does it make sense to invest in China for growth instead? So in fact, this is something. Thanks for Eric for the question. Very timely questions. I'll talk about China very soon. Okay, this is where we left off. Assuming I've been doing a dollar cost averaging on US, I really have my I will really consider I'm worried lah, whether I should continue doing that lah. So that's basically it. Okay, because of the news here. So personally, I'm actually quite bullish about China. As per mentioned, I think fundamentally China is actually going through what I call a rebound process or restructuring process. As you can see now, they are being the number one in a lot of things. Tech, they are being number one. Finance, by the way, Tiger is actually a Chinese company. Yeah. Tiger, Mumu, I think also from China, if I'm not wrong. Also, basically, you can see that they are in a lot of areas, they are actually number one. Number one, they're replacing. And of course, the other interesting about China is the government. They have easier control, pump in stimulus, or want to do monetary policies. It's not easier lah. Not like US, they have to go and negotiate. I don't know what left wing, right wing, upper, lower. I don't know lah. It's not as for China. It's not so difficult. Okay, they are easier for them to implement strategies, and already it is China is rolling out, as you can see, a lot of fundings to support not just the stock market, but also to support the whole economy lah. So, okay, this is what I understand. It's not official. It's not official. This is what I understand. So whatever stimulus package China has been rolling out, is just to test the efficiency lah. Okay, again, these are not official source. This is I read from certain analysts. So what they say here is this, which I believe, okay, China, whatever stimulus they have been putting in last year, they're only just trying out, okay, the efficacy. So once they actually find something that is actually very efficient, very effective, then the real stimulus will come in. Or at least in some analyst report, this is what I have read. So in that sense, number one, I am actually quite bullish. Of course, you can see last year, once the money come in, pump, the stock market go up immediately. Okay, and if the analyst I read is correct, so you expect more of this money to come in, then you actually sustain. And of course, China itself, structurally is actually very different now. You're talking about they are no longer a producer of cheap products. They are producer of high-end products, sometimes better than US. And I don't know. Okay, by the way, the day we saw this car, I'm not sure anybody saw. Have you all saw this XPeng car? Do you actually saw this XPeng car in Singapore? XPeng, XPNG. Anybody saw this? XPeng car. So quite interesting. So now there are a very different Chinese car in Singapore. Thank you so much, Michelle. So there are different Chinese car in Singapore already. Okay, so in fact, the rumor is that they are going to overtake the whole car, the global car industry. Next time it's no longer Toyota, Mercedes, or whatever. Once it comes to EV, or is the Chinese, what they call it, the 天下 of the world. Okay, so bullish. I am bullish about China. Yes. The only question I have is how long will it take for China to recover lah? So quite interesting. That day I was speaking to a Chinese friend who happened to be quite on the ground. So she actually runs a company that deals with FMCG, fast-moving goods. So apparently she said that on the ground, the morale is actually still low lah. A lot of Chinese still cannot find jobs, so on and so forth. So my conclusion from all this input here is this: China, give another 5-10 years, okay, it will do very well with the government stimulus coming in, with the government able to pump in stimulus easily, with the government easier to make decisions. Okay, that's one. Number two, okay, economy itself, they are actually going to be number one in a lot of things. They are probably going to rule the EV companies. They are into biotech, whatever, so on and so forth. Okay, so you look at long-term 5-10 years, I believe is going to bullish. So the question is, how long? When will the recovery start? So this one is anybody's guess. This one is anybody's guess. So again, is it the right time to start investing in China now? I don't know. When is the right time? I think nobody knows. Okay. But one thing for me is very clear is I wouldn't want to keep betting on US from a long-term perspective. Okay, can. So there's some comments. Also easier for them to implement bad policy. Okay, thank you so much, Eric, for sharing. BYD already overtook Toyota as the best-selling car in Singapore now. Wow, okay, this is something new. Kit Huyen, thank you so much for sharing. I didn't know. Seriously, because I don't really see. Yeah, I mean, I've been seeing BYDs on the road, but is it more than Toyota? Okay, that is, well, okay. I'll definitely go and find a bit more, but thank you so much. Have to solve the property issue first. Okay. Okay. I mean, okay. I think. Okay, from the property story, what I understand here is this. So over the past 20-25 years, China has done very well because of the property markets, infrastructure markets. Okay, that is one of the main driver. But what are they doing now is they are finding new drivers. Okay, like internal consumption, or like being high tech, so on and so forth. So I don't think they are just depending on property to again bring them to newer height. So this is what I understand. So of course, yes, they will also put in effort to solve the property issue, but I think now it becomes secondary. It becomes secondary. Okay, Kate Huan, thanks for sharing. But I'm scared of China. One man makes all the decision. Okay, sure. Of course, it's not without its risk. Thank you. Thank you so much for all your opinion. Thank you so much. Okay, good. So it's actually good to hear from different opinion. And eventually, like I said, what I'm trying to do here today is just to give you a guide, not a solution. If you chose to follow exactly what I do, all I can say is good luck. Remember my disclaimer. But really, what I really want to do is just to stimulate your thinking, rather than just follow me blindly. Just start thinking, don't have to agree with me. A lot of things is actually opinion, and I base a lot of my decision on opinions, because no choice. We are talking about looking at the future crystal ball. Okay. Now let's talk about the risk for property. Yes, so the question here is this: let's say you have hold a property for over the past 10 years, making good money. Is it time to sell, or is the property really expensive? Now, one thing always like to compare property with is with the income level. So Singapore, there's actually this data called the income average household income per decile or decile. That means top 10% of Singaporeans, what's their average income? The second 10% of Singapore, what's the average income? So generally speaking, if you talk about property, you are talking about targeting people with the top 20% of Singaporeans in terms of average income. Okay, so I take the 8 decile. That means is between 80 to, okay, yes, is 8, 9, 10, 10, okay, 70 to 80%. Okay, 70 to 80% of the Singaporeans, this is the average income. So if you're about 70 to 80% in terms of that household income group, your average income should be about like this. So this is household income, not personal household. That means about 2%. Okay, so what I've done here is this: I actually compare the property price versus the income growth. So you can see that over the past 10 years, the property has grown by 4.6% per annum on average basis. Okay, on average, grow by 4.6%. Income only grew by 3.3%. So what it says here is this: the property prices has grown faster than the income over the past 10 years. Okay, but is it a a risk already? Can we say that based on this, or now the prices are too high? The answer is no. No. Okay. The other measure I look at here is this. Is basically this is what I call the affordability measure. Okay. I did an estimate. So this is the index. So interestingly, you multiply that by let's say 10,000. Okay. So this is estimate price, which is about right lah. So it's about like a 3-bedroom condo. Okay, 3-bedroom condo probably in the RCR region. Okay, like for example, 10 years ago, I think Tiong Bahru, or either that, in Queenstown, or 3-bedroom cost about 1.4 million, about there. Okay, so it's about right. So I just convert this to like a property price. So what happened here is this, assuming that you buy a property at this price, 1.4 million, and you borrow 70% of the property price over 25 years at 2.5%. Okay, your monthly interest is actually about 4,447. Okay, and you multiply that with, and out of this 447 is actually only about 29.8% of this income here. Okay, so what I'm trying to say in this table is this: how many percent of this income is actually used to service a mortgage? Okay, that's what I'm trying to calculate here. How many percent of the income is actually used to service a mortgage? Assuming that, okay, people in this income, they'll go for like a 3-bedroom condo, 3-bedroom condo at RCR region. So I repeat, this one is a little bit confusing. I repeat. So down here, estimated property price, what I did is I just multiply the property price index by 10,000 times. Okay, by 10,000. Okay, which is about right, which is about the price of a 3-bedroom condo. And what I'm trying to do here is with this estimated price, I try to calculate if, let's say, this person, when they buy this property, and he borrow 70% for 25 years at 2.5% interest rate. Okay, every month he has to pay about 4,447. Okay, and this 4,447 is actually going to be just 29.8% of his monthly income. So what I want to calculate is how many percent of the monthly payment is how many percent of his income is actually used to service the mortgage. Okay, if whatever I said 3 minutes ago makes sense to you, don't mind, just help me type a 1. If you don't know what I'm talking about, please help me type a 0. Here I want to find out how many percent of the income is actually used to pay mortgage. Okay, there's some 0. Thank you so much. So let me just repeat. So number 1, what I want to show in this table here is this: how many percent of the income, how many percent of a person's income is actually used for property, which is actually used to pay mortgage. Okay, that's what I want to find out here. So how do I do that? So number 1, I convert the property index to property price. Okay, which is simply I just multiply by 10,000. Okay. Number 2, with this property price, I am assuming that the person who actually buy this property, he needs to borrow 70% from the bank, borrow for 25 years and at 2.5 interest rate. And if he does that, every month he has to service 4,447. He had to pay 4,447 for the mortgages. Okay. So number 3, so this 4,447, if you compare with the average income, which is here 14929, so I take 4,447 divided by 14929, that is about 29.8%. So what I'm saying here is this: in 2015, most people who buy condos, they are using 29.8% of their income to service their mortgage. Okay, that's what I'm trying to say here. For those who put 0, Scarecrow, Cheryl, and Nikki, if it's okay, help me type a 1. Still lost, please help me type a 0. Okay, good. Thank you. Thank you so much. So if you can see here, so why I want to do this? What happened here is this: we see that the property price is growing faster than the income, but the question is the property price too expensive? This is a very good gauge. And keeping this assumption, you realize that the affordability only went up by a bit, or in fact only reduced by a bit. So it's actually still quite affordable. Instead of people using 29.8% of their income to service, now people are using 32.8%, which is not very significant. So in that sense, from that perspective, the property prices are still not expensive, still quite affordable. That's what I'm trying to say here. Okay, because 10 years ago, people used 29.8% of their income to service mortgage. Today, they use slightly more, 32.8%, which is, if you ask me, still quite fair. It's not like, wow, now 32.8% is a lot more of my income. Okay, so again, my point, let's say, for example, there was one point in time when I was working in China, a lot of households need 70% of their income to pay for their mortgage. Okay, 70%. So obviously, that one, the property price is too high, too bubble. Okay, but Singapore, 32.5, so it's okay. Okay, but this is on the assumption that one thing doesn't change. Okay, so my point is everything status quo? Everything status quo. Currently, the price increase actually still okay, not expensive. But I'm actually making one assumption that one thing doesn't change. Can someone tell me what am I assuming that it doesn't change so that we can still consider Singapore property as cheap? Okay, thank you so much. Interest rate. Thank you so much. And I've actually done a chart here. If let's say interest rate go up to 5% instead of 2.5, you will surpass the 40%. So what I personally believe, once this percentage go above 40%, okay, property price cannot sustain really. Property price have to come down. This is my belief. Okay, people will think that it's expensive already. So why is it 40? It's actually from empirical study. So over the years, you can see that once it hit 40, it's like people will find it expensive. Okay, but of course, it's quite subjective number. Yep, so yes, if let's say Trump increase interest rate, then the property will be quite risky. So this is my assessment for property. If everything status quo, everybody happy, nothing changed. Property, I know property price has increased, but actually our income has also gone up. So property price not expensive yet. But if interest rate also go up, then of course the whole story change. Okay, correct. So yes, the new launch 2007, 3000, but 10 years ago, average income is 14,000. That means husband and wife earn about 7,000 each. Today, husband and wife earn about 10,000 each. So at least this is what the market says. Price increase, income has increased. So that's fair. That's fair. Okay. Okay, this one is more like a question. Do you all actually see any significant risk that prevent SG Economy Insurance to continue long-term returns? So anybody thinks that Singapore no longer will enjoy 8% going forward? Anybody thinks that, the insurance cannot grow by 3.5%? Or any risks that you think that will prevent the SG market to grow by 8%? Anybody? Okay, I also don't think so. I think this one should be continue. Okay, thank you so much. Very aging population. Personally, I don't see a huge risk to prevent such return from continuing. Okay, so in conclusion, this is my personal conclusion of whether such return can continue. I think SG market, the risk that it cannot continue is very low. I cannot find any significant risk. For US, the risk of not continuing the 10%, I think is quite high. On the long-term basis, 5 years, 10 basis, I doubt US can continue the 10% return per annum. Okay, for reason I mentioned earlier. Insurance, I think the risk that it cannot continue is very low. And property is the middle lah. But now if you want to buy property, have to be very careful lah. Okay, there are still properties worth buying, but need to. This is the point you cannot anyhow buy. You know, 10 years ago, you just go to any show flat, just buy, show make money. Now cannot already. Now we have to be very selective because you know the risk of interest go up to 5% is actually possible. It's actually quite possible. Okay, can so this is my background. Okay, Kevin, I will answer your question very soon. So again, sorry, Po Wan, I think this is not the platform to discuss property. Yep, we can talk about it when a subsequent session when we're dedicated on property. Yeah. Okay. So is it worthwhile to take the risk? So end of the day, you have to talk about allocation. So personally, you know, I think that US I will continue, but I'll probably reduce. If let's say for example, previously I was only invested in US, okay, I probably shift some over to China. Okay, and the main bulk will actually still be in Singapore. Okay, so my point here is this: I won't be like, oh, US no good, don't invest in US totally. China good, everything put in China, no. Okay, end of the day, it's just about percentage changes. Okay, so let's say for example, US last time 20% of fund go to US, now I cut down to 10%. Okay, maybe China last time only 5%, now I want to increase to 10%, something like that. So this is what I mean by, this is what is the purpose of review lah. After doing review, what will change? Okay, I will now spend less attention on US and more attention on China. Would I still invest in US? Yes. It's just a function of more or less. Okay, and of course, this little part is about active trading. So I think it also makes sense to diversify lah. I don't think I should put all my eggs into US. It actually makes sense to diversify into the Chinese market. So yep, that is what I mean by long-term review. Really see what you have done in the past. You know, think long-term. Should you do any change or not? So the question is, should you actually make any change to what you have been doing? Okay, then we go and review the news. Also, in my case, I think Singapore, I will continue the way I've been doing. US, I want to cut down. I want to include China, okay, after this review. Okay, good. Question coming in. I'll try to answer some of them. Does it mean that you will be covering some Chinese stock in the future session? I will probably start looking at some Hong Kong stocks. No promise. To be very frank now, China, I am only using ETFs or either funds. Okay, but I think it does make sense for me to cover some Hong Kong listed stocks. So I would say it's yes, but maybe for next 6 months, not much. Maybe every session maximum one, something like that. My no 70% SG stocks then will be dividend, no? So this is how it look like. 70%, this is mine. I'm 70% SG stock, so that means it's dividend. 30% I'm looking for growth. So you can tell this way, 10% China, 10% US, 10% trading. Something like that. Send money into JSSEZ and political instability and Malaysia project affecting Singapore growth. Okay. Do you foresee the increase in interest rate in the shorter term? Okay, personally, right, I am still believe that the interest rate is starting to go down. So in fact, you know, before the US election, right? Before the US election, or before Trump take over, so the Fed is already started to reduce the interest rates. Okay, so personally, when I actually just did what do you call that, not say refinancing, reprice, I actually reduce my interest rates. So I don't in I don't see an increase as of now lah. So of course we'll see what Trump does. But I think Fed okay, so my point is actually Fed wanted to start dropping interest rate until Trump come in. So I think now Fed will be just holding on first to see what happens. My personal take is probably it will remain the same, or at least, or I don't see a sharp increase at least over the next short term. Now, so this is one part of the review. Okay, the other thing, okay, I would hopefully is okay, slightly related. The other thing that I hope that from a longer term perspective, you all are already currently building systems. Okay, ever since your very first what do you call that? First webinar with me. If you actually go through my preview, I've been emphasizing on system, but I'm not too sure whether you are practicing it. So in the end, it's not about trying to buy low, sell high, but really building system. Casino, how does casino make money? Do they use art to make money or science to make money? Now, what is art? Art means because of luck. So casino make money because of luck. Or because they use science. What is science? That means they have a process. And every time they repeat the process, okay, they will always make money. Or put it this way, what is science? Science is a process whereby every time you repeat the same process, you get the same result. Okay. What is art? Art is every time you repeat the same process, you have different result. So casino use science or art to make money. Thank you so much. Use science. Okay. And I think someone has shared. So basically, casino use the science of probability to help them make money. Okay, so let's go through this example. What you see here is a roulette. If you see on the roulette, there are 37 numbers, 18 black, 18 red, and 1 green, as you can see here. Now, do me this favor, go and calculate. If let's say I bet black, what is the probability of me winning this game? Okay, 18 black, 18 red, and 1 green. If I bet black color, what is the probability of me winning this game? Anyone can help me punch into a calculator, please? Yeah, 18 divided by 37, which is about 48%. Thank you so much. Okay, about 48%. Let me just 18 divided by 37. About 40%. Thank you so much. Which means to say, the probability of the house winning is what? Is actually about 52%. Okay, so that's number one. How casino use science? Use probability. Every game, the casino has an advantage. Like in this case, if I bet black, I'm a gambler. The chance of me winning is only 48%. But the chance of casino winning is actually 52%. Okay. The second science that they use is actually this thing called the law of large numbers. Okay. The law of large numbers says that if there is enough trials, the outcome will always equal to the probability. Okay. Which means to say, if let's say, for example, if I bet 1,000 times black, I will more or less, okay, win 480 times, and I will more or less lose 420 times. So net, I will always lose 40 times. Whereas from the house, from the casino perspective, if he play 1,000 times, he will always win 520 times. He will always lose 480 times. So net, he will win 40 times. Okay. So basically, casino use science to help them make money. They don't care what is the outcome. He don't care what number, but as long as there's enough people play, as long as the probability is in our favor, after 1,000 people play, he will always confirm win 40 times. Okay, so this is what we call casino has a system. Okay, it's not that he has the what you call that, the dealer have special kung fu, or the dealer roll dice have a special way. You ask him roll what number, he run. No. It's not about, what kung fu or the dealer know how to read card, memorize card. No, it's all based on probability that help them always make money. So my point here is this: investing is also the same concept. Okay, I have proven, okay, probably maybe not today, but I've proven before. If let's say you actually select a stock based on the criteria I've stated, like the six tests, looking at, valuation, so on and so forth, very likely, the probability that the stock make money for you is about 60 to 70%. Okay. So all you have to do is, if let's say you have a portfolio of stocks, or in our case, just 30 stocks, okay, to hit that minimum number, 30 stocks, very likely over time, 70% of the stocks will make money for you, 30 will lose money for you, and net, you will make money from the 40 stocks. Okay, so if you have been practicing what I've learned, so like for example, dollar cost average, or other than, every month buy into different stocks. And every time you choose the stocks, it's actually based on my criteria. The six tests, you like the business, okay? You have done valuation, proven to be at least fair or undervalued, or very likely this stock makes money for you 70%. Over time, if you, let's say, for example, have more than 30 purchase, you'd have more winning than losing stocks. Okay? So basically, you have built a system. So my point here is this. When you actually review your investment journey so far, have you been building a system? Are you still thinking like a gambler? Or are you now thinking like a casino? Which, of course, hopefully, if you're with me long enough, hopefully you are thinking more like a casino lah. Because as we all know, gambler confirm will lose over time. Casino is the one that will win. Okay, so how to be a casino? You think about building systems rather than keep trying to ask, what's the stock tip? This stock can go up, not? No, don't be a gambler, but what is the system? So I demonstrate to you long-term share investing is a system. So this is what the long-term you do. Every month you invest. Every month you invest. Every month when you choose stock that time is based on the criteria. You diversify over different stock over different time. So based on long-term, 6 to 9%, like what I show you just now. Okay, even you just dollar cost average on SGX, because basically you're buying 30 different stocks. Buying 30 different stocks. Okay, net overall you'll win. You have actually built a system. Okay, currently now I am trying to build another system. Unfortunately, I don't have result to show yet. Okay, I am doing a little bit of trading. This is more like my retirement hobby lah. Okay, when I retire, nobody want to employ me anymore. Maybe I'll have a retirement hobby. And interestingly, now a lot of platform you can see they actually give probability. Can you see? Okay, this is from my Tiger trading platform. But I'm quite sure many others will also have trading platform. They actually give probably a profit. But for options only, I think only for options. So with that, I think very likely we could also build a system which I'm still in process. Okay. But the main point I want to put across here is, so please, if you are still behaving like a gambler, please stop. If you are still like, what stock to buy? Buy today. Tomorrow the price go down, quickly sell lah, or still don't know what's happening. Try to just, here this one good, just go and buy. Here that one good, just buy. Then being a gambler, of course, long term you always lose. And I really hope, or if you have been building system, very good. For those who have not, hopefully this serves as a reminder. It's time to change the mindset. Think in terms of casino, don't think in terms of gambler. Okay, any questions, comments? Okay, if not all good. So basically the conclusion from my long-term review, for my investment strategy review, okay, three things. Number one, think long-term. Don't need to react to short-term news. Seriously, even Trump, if you think it's going to bad, you stop investing, man. No, you do not. Also, don't need to react to short-term news. Focus on the news that may impact long-term. Also, maybe this is my perspective. Of course, to each his own. But this is what I'm going to do, lah. I'm not so bothered by, Trump being a president, what kind of risks. But rather, I'm more concerned with, hey, China may take over US very soon as the number one. Okay, number two, this one quite important. Please think in terms of system. For those who are actually still behaving like a gambler, hopefully please stop. Okay, it's time to have the casino mindset. Think in terms of system. If you follow this, you already have one system already. For those even want to go to trade, think in terms of how do I have a system rather than try to buy low, sell, try buy sell, then think you're always lucky lah to actually get it. Okay. And number three, think in terms of portfolio. Okay, this is more for the risk. Okay, so again, a lot of times it's not about China or US, Singapore or China. No, it's always everything, but the percentage change. So to me now, Singapore still the same, US reduce, China increase. And don't be greedy lah. End of the day, if the old and steady give good regular returns, don't rock the boat lah.